Good afternoon, welcome to GrainTV. My name is Cody Bills. Today is August 5th. We had the market moving higher here today. Let's turn over to the grain hedge trading platform and see where we closed off the day. Corn for December up 4.5 cents to 3.83 1/4. November soybeans trading up 11.5 cents to 9.53 3/4. And wheat in Chicago on the December contract up 7 1/4 cents to 507 1/2. Now we did get some news out today. South Korea's largest feed maker issued an international tender to purchase 207,000 metric tons of yellow corn to be sourced from optional origins. It's going to be interesting to see who wins that tender. Also, Egypt's gas issued a tender here today, and they ended up settling on Russian wheat. They bought 120,000 metric tons of Russian wheat. Speaking of Russian wheat, this morning we also had the Russian Deputy Agricultural Minister say that they are looking to change the mechanism for calculating wheat export tariffs that they put in place a couple months ago in about 2 weeks. Basically what they're trying to do is really streamline the process. There has been some holdups in terms of calculating it. Some buyers ended up paying more than they expected to pay based on what their interpretation of the formula was. And so there's a little bit of a clarification that needs to occur there, and it looks as though Russia is trying to do that. Now yesterday, after the market closed, FC Stone's yield estimates were released, and what we saw was basically FC Stone factoring in a yield this year for U.S. production of 165 bushels per acre for corn. That's down from the USDA's July estimate of 166.8. When you look at soybeans, their yield was 45 bushels per acre, down from the USDA's July estimate of 46. So it looks as though FC Stone looking for a decline in yields here from the July report. Now when you look at the corn production, they're expecting 13.381 billion bushels. That is down 149 million bushels from the USDA projections. And soybeans are expecting a production of 3.797 billion bushels, down from the USDA forecast of 3.885. So when you look at FC Stone, it looks as though they're expecting production to be slightly lower than what the USDA announced back in July. We'll have to see what the USDA has to say in the 12th report when the USDA supply and demand report for August is released. Now today we also had ethanol production numbers, and what we saw was a decline of 4,000 barrels per day in ethanol production week over week. We declined to 961,000 barrels per day. Right now that puts us well over the 4-year moving average. We're about 100,000 barrels per day above where we typically are when you look at the 4-year moving average, and we're 59,000 barrels per day above where we are last year, or where we were last year during this time. So we still maintain above average production here in terms of ethanol. We're running about 4.5% above last year's figures. So this is very positive ethanol production despite the decline that we saw week over week. Ethanol stocks, we did see a bit of a drawdown there, 409,000 barrels here to a weekly total of 19.24 million barrels. Take a look at the November chart. Now I'm going to talk a little bit about this because, you know, for the last 2 days we talked about the bullish price action on Monday, how that was confirmed again on Tuesday, and now we're starting to get a little bit of fundamental news to back this up. So positive price action here. You'll notice we came up, tested that 100-day moving average early on in the trade. We actually retraced after touching on that resistance. We weren't able to really hold the ground up there, but near the close we were able to buy back and really close right at that 100-day moving average. And so when you look at this technically, this looks relatively strong. We're going to have to see whether or not we get above and close above that 100-day moving average to kind of eliminate that as a major resistance level. But so far, last week, it acted as a resistance twice. It seems to be very strong. We'll see whether or not in the overnight we can continue to move higher and then have a strong day session tomorrow, or whether or not we bounce off this and start to look back toward the lows. The one thing that I would say that is supporting soybeans right now is the fact that the 6 to 10-day outlook is beginning to look dry. And there are parts of northeastern Iowa, parts of Wisconsin, parts of northern Illinois that really could use a drink of water at this point. It's been relatively dry in areas like that. When you look at the 8 to 14-day weather outlook, it's also looking dry. This is not going to be very positive for the soybean crop, which is 54% pod setting. About 54% of the crop is pod setting. And I basically circled this crop moisture index, the area that they were talking about, some of the dryness concerns there. And when you look at that extended forecast, there doesn't seem to be a lot of relief in sight for it. So that could have a bit of a negative impact on soybean production. One of the reasons why we've seen kind of a change in trading intensity here over the last couple days. We'll have to see whether or not we bump up over that 100-day moving average. Based on the trading action over the last couple days, I wouldn't be surprised if we closed above the 100-day moving average here tomorrow. But that, again, is my opinion, and that is not necessarily what's going to happen. Markets never ask me what I think. So guys, thanks a lot for tuning in. If you have any questions about what we talked about today, please give the office a call. The number is 877-472-4607. Remember, if you haven't done so already, take a demo of that 14-day free trial. It is a fantastic platform for grain producers that are looking to be able to stay on top of the markets and be able to capture any market opportunities. If the market moves up to a price point that in your marketing plan you defined that you really wanted to make a sale up there, it's nice to be able to have access to the futures market through your phone and be able to execute a futures sale and hedge that price risk. So you guys, again, there is risk of loss in trading futures and options, and I'm not trying to diminish that. If you are trading as a result of hedging or as a means to hedge, give the office a call. We'll discuss it. We'll see whether or not this trading platform is right for you. You can reach us at 877-472-4607. Thanks a lot for tuning in. We'll see you here tomorrow for the Export Sales Report.